Hello everyone, this is the third episode of my 2026 Portfolio Challenge series. I want to start by showing upfront how much each portfolio is doing and comparing them to SPY year to date. So as you can see, I have a little table here. I'll put these in from now on. So we can see that the 2026 main portfolio is performing, it's 1.1% up. Same with the deep value, roughly the same. The choice value is a bit down and the meme stock is 4.7% up, which is pretty insane. The S&P 500 or the SPY ETF is 0.78% up, so 3 out of the 4 are outperforming the S&P 500 after 3 weeks, which doesn't mean much, but it is something. So this is, again, a disclaimer. This is for entertainment and educational purposes only. I am not a financial advisor, and this is not financial advice. This is all done on a paper trading account, and these are all simulated trades with no real capital at risk. So in today's itinerary, I'd like to talk about rolling in the money covered calls or cash secured puts. Then I'll give a real life example of how I'm using them, using Celsius and Rivian. So that's going to be together. And then we'll talk about ELF, what happened there this week. And then I want to talk about the stock ticker CNK or Cinemark Holdings. I went to the movie theater today and was pretty impressed with them. And then finally, a small overview of each portfolio. So let's talk about rolling in the money options. So the idea of rolling in the money options is rolling up and out. So how do you choose the next strike price and the next strike date? So personally, I like to go 1 week out, and I like to go as high as I can without losing money. I'll give 3 examples: 2 yes to roll and 1 no to roll. The 2 yes to roll will start with Celsius. So this week I had a strike price of 51.67, and my strike price goal based on Thinkorswim and the general how much I want to lose on Celsius per week. So the strike price was 52. So it's the closest one to the 51.67 for the next week. And it's still up and it's 1 week out. So it's up and out. The premium I paid was $20. It says 20 cents, but it's 20 cents per contract, and each option is 100 contracts. So $20. And so my total gain by doing this was $52 next week's strike, meaning if next week I want to let it get called away, I'll get $52 per. I'll sell them at $52 per stock for 100 stocks. That's what it means by getting called away. So 52, which is my new call away value, minus the 51.67, which was the previous one, which is 33 cents, minus 0.2, which is the premium I paid. And so this week, by doing this roll, even though I paid 20 cents, by definition, I'm going to be making 13 cents. Worst case scenario, this gets called away. So this was a positive trade for me, so long as Celsius stays above the 52. If it's below 52, then I can just go back to selling covered calls like usual and collecting premium. So the next one was Rivian this week. So this is a cash secured put that I'm doing with my free money on the 2026 main portfolio. So the strike price was 8, the 2026 main portfolio. So the strike price was 18. Rivian, I think both of these were in the money. In the money meaning for cash secured puts that they're above the closing value of the stock. So I wanted to roll it to the closest one, to the closest strike, and out 1 week. So this is closer to the 16.6. It's closer in the money. So 17.5 and 18. And then I paid $38 in premium, like earlier. So the total gain was $18 minus 17.5, because I'll be buying the stock at 17.5 if I decide not to roll it next week instead of 18. So already I've made 50 cents here, but I paid 38 cents to do this. So I made 12 cents per option contract. And then finally, I'll give you an example of this week I chose not to roll up and out for the ELF. So why did I not do that? Because my strike was 83. My goal was 84 up and out, and the premium to pay was $1.50. So 84 minus 83, like the Celsius strike. So that's $1. And then I had to pay $1.50 per contract just to move it up and out $1 this week. So I would have lost 50 cents just by rolling it up and out. So that's not worth it to me. So I would have lost money. So I didn't do that, and that's going to lead us to the next topic, which is ELF. So for ELF, my fair value was $87. And then, as I just talked about the premium spread on the calls, it was large. And then, as I just talked about the premium spread on the calls, it was larger than the money amount. So the $1.50 was larger than the $1, which is what it technically should have been. Actually, it should have been less than $1, theoretically. And I'll show you in a second on Thinkorswim what the premium spreads look like on ELF. I I mean, it's been 3 weeks. This trade made me 7% due to the option premium and the strike price that I got it called away at, which I have the math down here. I'll go over it in a second. And then personally, the lesson I learned from this was to check out the spread on calls before I start getting excited and start selling covered calls on things, because sometimes the premium spread isn't enough. So as I said, how to get to 7%. So I had 100 stocks. I bought them at 77.97 per stock. I sold them at 83. They got called away at 83 because of my options. And then total premium I collected over these 3 weeks was $46. So I had 46 on the first week, and then I managed to roll it up and out 0 on the second one, and then I got it called away on the third one, which is also a 0, for a total of $549 gain, or 7% gain. Now the 4.5% isn't that bad, but it is something that I just learned. So let me just really quick, I'll show you what a spread on ELF looks like, and then I'll show you what a spread on a good spread looks like, which is Robinhood or GameStop, or I think Rivian also has decent spread, so we can check that really quick. So here's GameStop. Let's go to ELF. So as we can see for this week, actually any of the premiums, so this is where we can sell them at, or we can buy to close them at, not sell them. And this is where we can sell to open them. So as you can tell, this week, this spread is, what is that, 70 cents? And here it's 65 cents. These are crazy spreads. Or even in the lower ones, we're looking at $3 per contract of a spread, which is insane, considering that if I wanted to buy this. So this is what a really bad spread looks like, where it doesn't matter. Theoretically, you should be able to do this move, but it doesn't matter because the spread's too big. There's not enough liquidity. As you can tell, the buy and asks, I mean, there's basically none here. 100. So let me show you GameStop really quickly, which is a very liquid option. And here we can see several hundred to 1,000 of them bid asks. Look at this spread. This is 4 cents of spread. 4 cents. 1 cent. Let's go back to the PowerPoint. So that's the whole deal with ELF this week. It got called away. I probably won't buy into it so long as it's above $90. That might be a mistake, but I got to trust my own fair value on this. It's been correct previously on this stock, so I just got to trust it. Okay, let's talk about Cinemark Holdings. So currently the strike price is, I'll just open it. Alpaca. Yeah, let's just go to stock analysis. That's what I like here. Cinemark Holdings. So currently the stock is at almost $24. I went to the movies today, so I saw how it was working. It was, it was not as empty as I thought it would be. From what I'm reading online, it seems everything's very empty. So I was pleasantly surprised. But yeah, so you can see even the worst analysts say it's undervalued right now. Even the most bearish analysts, not the worst ones. The average is at 34.5 and the high is at 37 based on stockanalysis.com. Now, using my own analysis figures. So this is the total debt. That's the total debt, net cash, net debt. And then the operating income for the past trailing 12 months was around 360. Market cap of 2.7 billion and 115 million shares. And then I inputted a 18 PE, which I think is decent. That's roughly what Disney is. I think that's a decent PE given their seasonality and their growth, which will put it at 34.3, which is, to be honest, that's basically on par with Cinemark Holdings over here, the average. I didn't do this on purpose. So for me, I'll probably be buying into this week. I'm not sure how much. I do know that I won't be selling covered calls on this, most likely. Let me check. If I remember, it doesn't even have weekly calls. Yeah, this doesn't have weekly calls. This is only monthlies. That's irrelevant, so I'll just be buying that. So that's Cinemark. I did talk about the DCF at 35.28. Yeah, I already have it loaded up, so you can tell that there's a lot of seasonality to how this stock performs. The Altimeter's bottom finder, it's liking it where it's at right now. I like it. And, my target is at 34, which is not out of the realm of possibility. That's basically the peak of the top three peaks here, 1, 2, 3. So I'm not too worried about this. It started dividends recently, but it's had a decent turnaround. It's got good technicals. It's got good technical analysis. The DCF works out. But when big movies come out, typically people will start to invest. And this year we've got Avatar 3, Wicked 2, Zootopia 2. That's all going to go into this year's earnings, or this quarter's earnings, which I think are going to be significantly better than what it's saying. And then they've also got the Lord of the Rings in the local theater here, which is pretty cool. And this year, the Odyssey is going to come out, which I think is going to be a huge hit, and a ton of people are going to go to the movie theater. So we're going to have Avatar 3, which got a lot of people. Zootopia, I mean, I went to see that today, and the whole thing was packed, basically. And then the Odyssey. All of them in a relatively short time frame of 8 months. I think this stock's going to do really well. So enough on this stock. Now, I also wanted to talk about the meme stock portfolio here. So initially, this was from week 1. I was talking about how I expected to do at least 20%, and my expected case was 35%, with my bull case of 50%. Now, I was saying that this is very optimistic, and it is, but I wanted to explain it a bit further. So my goal for this portfolio is to reach 7,000 GameStop values, and this is going up every week. So this week I've got over 5,000 already, and I started out with I think 48,000. So how am I actually performing this? So let me go here. Yeah, so I started out with 48.50 at the stock price of 20.66. So I started that out that week. And then I sold a bunch of stocks, or sold a bunch of covered calls on it, and I made 624. With those 624, I went and I bought some more GameStop. This is because I had a little bit of cash, and then I made 980 last week, and this week I also collected 980, and so I'm at 5,006. So just to put that into perspective, so I made this small simulation, right, and showing where you start out with 5,000 shares, which is roughly where I'm at right now. And, a premium of 16, I'm collecting a bit more than that, but, premium of 16, that's fine. And I'm using a stock price of 21, it's gonna move. If it's cheaper, I'll make more shares. If it's more expensive, then the premium goes up, so it doesn't really matter. So as you can see, every week I'm adding a certain amount of shares. And Alpaca is allowing me to buy partial or fractional shares, so that's fine. And, when we jump all the way to the bottom here, this is at week 50. So it's got me at over 7,000 GameStop stocks. Now, obviously, if GameStop goes down, then I'll be losing money. But if it stays at around 20 to 22, which is where I have the fair value at. So if I make 72.50 and the stock price is 21, right? That's going to be 152,000, which is 50%. That's where this bull case of 50% comes from, because obviously not everything is going to go according to plan. But I mean, 35%, if it stays at $21, then 35%, that's, right, that's 6,000 something GameStop shares, which is fine. That's very doable. So that's where that came from. Now, obviously, this is based on GameStop still having high IV, and making sure that the stock doesn't plummet, and et cetera, et cetera. So a bunch of these small things that need to add up in order for GameStop to not, or for this to pan out. But 7,000 GameStops, I think that's fine. I think that's very doable. And if that does, then I should reach this 25 to 50% as I initially stated. So let's go over the portfolios a bit. As I talked about, ELF was sold, which is why I have more cash this week in the 2026 portfolio. Hood is still dominating, even though it fell significantly. It's down $2,000, and I've only collected 300 something in premium. So that's kind of depressing. BlackRock is up nicely. And that's at 11% of my portfolio. Celsius is at 11%. Yeah, you can just look at this and read it. This is the main portfolio. I will be using this cash to buy Cinemark. $8,000 is, I think, more than enough for that this week. This is the deep value portfolio, so this is the one that's not on Alpaca. Yeah, you can just stop it, check it out. No changes really over the past week, so the cash is still the same. We'll see. I'll probably rescan this week and make sure that everything's still fine. I don't expect the cash. I like having free cash for this type of thing. Same with the choice value. I've got plenty of cash. 15% of the portfolio is cash. And I'm not selling cash secured puts on this one. Yeah, so this is where it started out. You can see ups and downs. And then here we can see the ones that I'm losing the most on. So total P&L. Yeah, Hood is down pretty bad, and so is Adobe. Actually, Meta's also down. Most of these are down. And the best performing ones are Micron. I sold Elf at a decent gain, so that was 500 and something I gained. Costco's doing pretty well. And Celsius obviously is performing pretty good. But I do have the 52 calls for Celsius holding me back for half of those shares. So you can't just look at that. Then BlackRock is fine and Amazon's fine. So overall, I'm still up 1 point something percent. Yeah, 1.1%. And then we got the meme stock, which is up 4.67%. As I said earlier, I'm at 5,006. And then the value portfolio. So this one's actually down pretty bad. Apparently the value isn't working right now with Adobe. See if there's any news articles on it over here. And I'll also open Thinkorswim and check any news on this over here too. So Thinkorswim, what I actually like about it is that you can check all the news stories that appear. Okay, yeah, it seems the fear is pretty high, which I actually like. I like it when the fear is high. 296. It's under 300. Okay. Well, that's pretty bad. Let's make sure there's no news over here. No downgrades. But I mean, even the downgrades are significantly higher than it is right now. Yeah, I'll stick with it. My value was, I think, 340, which is fine. I'm still optimistic on this one. Okay, thank you for listening, and I'll see you guys next week.